capabilities over a decade ago. We have delivered over 2,000 global AI engagement during this time. In fact, today, we are using generative AI for multiple use cases like enterprise knowledge mining, virtual assistants, content optimization, automation in software development, and for synthetic data generation as well. But to accelerate innovations in this space, yesterday, we announced a $1 billion investment in AI and launched a new AI-first innovation ecosystem, Wipro AI 360. This ecosystem will bring together Wipro's full range of capabilities, including solutions, services, platforms, research, and intellectual property, as well as partnerships and talent under one umbrella, with additional funding and resources to fuel our growth in this area. As you see, we are placing responsible AI operations at the heart of all our AI work. Wipro AI 360 is meant to empower our talent pool and be ubiquitous across all our operations and processes and our solutioning for clients. This AI-first approach will unlock more value, more productivity, and commercial opportunities for us and our clients. But first, we need to train our people in this fast-moving field. Over the next 12 months, we will train our entire workforce, nearly 250,000 employees in AI, from hackathons to challenges on our talent crowd platform, Topcoder, to specialized trainings. We will leverage our blockchain-based DICE ID platform to become the industry standard for AI skills credentialing. Demand for AI specialized talent will grow exponentially over the coming years. We know that, and we will be prepared. Suba, our Chief Technology Officer, is here with us today to share more. Let me now talk through our strategic market unit performance, as in every quarter when we meet. In Americas 1, order bookings in terms of total contract value grew 37% year-on-year. Revenues for the quarter grew 1.5% year-on-year in constant currency terms. This revenue growth was led by healthcare and medical device at 9%, followed by consumer goods and life sciences at 7% each. High-tech, BFSI, are the two sectors that were impacted the most during this quarter due to softer discretionary spends. As a result, our Americas 2 market declined 2.7% year-on-year in Q1. In Europe, our European business unit delivered a year-on-year revenue growth of 4% in Q1. This revenue growth was led by Southern Europe and Nordics, which grew 26% and 14% respectively in the first quarter. In our APMEA business now, bookings in total contract value terms are looking healthy, with a 23% quarter-on-quarter growth. Revenues for the quarter grew at 3% year-on-year. Within this SMU, our India business grew 7%, and our business in the Middle East grew 6.4% year-on-year. In Q1, we completed the transition to the 4 global business line model that we had announced, if you remember, in the last quarter. This evolution of our business model is already showing up as faster time to market and also more inclusive one Wipro customer and delivery wins. Whatever challenges our clients may have, the solution exists within our global ecosystem, and we are tapping into the talent, capabilities, and solutions from every corner of our firm. We're increasingly able to build bespoke solutions for clients, and that's what is setting us apart. Ultimately, our focus is, and always will be, on serving our clients with greater innovation, attention to detail, and excellence. A great example of this is our recent win with a global digital interactive entertainment leader. Wipro will modernize their network infrastructure, delivering improved responsiveness and user experience. We will drive scalability to handle increased workloads and reinforce end-user security, all the while creating a platform that supports the client's expansion plans. This project brings together Wipro's architectures, consulting, cloud migration, implementation, and managed services capabilities. This win is also a good example of how Wipro can bundle solutions from multiple partners to deliver a wide range of capabilities. In terms of the demand environment, in some ways we are seeing tech investment normalize after the sharp acceleration in spending during the second half of the pandemic. More and more, clients are expecting faster returns on investments and optimizing cost through increased use of automation and vendor consolidation. In parallel, we continue to see solid demand in high growth areas like cloud, mostly around cloud transformation. Clients are seeking out Wipro's full-stride cloud capabilities for the next phase of their cloud strategy. We are helping them run more efficient and agile businesses and capitalize on the emerging opportunities presented by artificial intelligence. For example, a large global medical device and healthcare company has selected Wipro to transform their operations infrastructure into a modern, cost-effective, and cloud-first model. Wipro Full-Stride Cloud will deliver a consistent and omnichannel workplace experience to 120,000 employees in 160 countries. We will help this client achieve 40% automation and cost optimization, this while simplifying their global operations. Now, we are able to do all of this and more thanks to our 250,000 associates around the world. We want to see them succeed in their roles and in their career. As part of our transformation, we've continued to work on various aspects of employee experience with several new initiatives to streamline policies, processes, talent support, training, development opportunities. And we also want to make sure employees' voices and concerns are heard. Our 2023 employee engagement survey showed an overall engagement score of 88%, which is higher than ever before. And now, benchmark us to global standards on employee experience. Very proud of that. We were also named one of India's best companies to work for by the Great Place to Work Institute for the second year in a row. But that, to me, is table stakes. We must, and we will, continue to improve how Wipro is experienced by our employees. Because of all these efforts, attrition has continued to moderate quarter on quarter, coming in at an 8-quarter low of 14% in the first quarter. I am very confident that our long-term business strategy is correct and well suited to ride the changes we predict in the industry. Most importantly, I believe our business strategy will keep us competitive and resilient in the future. A final word here on our guidance before I close. For the next quarter, we are guiding for a sequential growth of -2% to +1% in constant currency terms. We expect margins to be in a similar range as in the last few quarters. With that, let me turn it over to Jatin now for his comments. Thank you.
Thank you, Thierry. Good evening, ladies and gentlemen. As you know, we grew this quarter 6% year on year, and we expanded margin compared to 15% we had in Q1 of last year to 16% this year, which was 14% growth of operating profit. Our other income was higher at 110%. Our tax rate was slightly higher as some of our SEs had come out of the tax bracket. It was at 24%. And as a result, our net income grew 12% year on year, which I think was a very healthy double-digit growth of profitability or profits year on year. Let me talk about cash flows. We continue to convert our profit very well into cash. Our operating cash flow as percentage of net income was 130%. And free cash flow was 126%. And again, both measures you would appreciate as one of the strongest that you could wish for. On Forex, we realized a healthy realization of 81.90 for every dollar that we earned. And we had $3.6 billion of hedges at the end of the quarter. In terms of cash, as all of you know, and Thierry spoke about, we completed our largest buyback ever. And after that, we still have a lot of flexibility on balance sheet. Gross of debt, we are at $3.5 billion of cash on the balance sheet. And net of that, it is $1.7 billion of cash on the balance sheet. So therefore, it leaves all the options with us in terms of how we prioritize our strategies as an organization. So this was a brief color on financials, and we'll be very happy to take your questions from you.
Thank you, Jatin. We will start the Q&A session. Please, if you have a question, raise your hand and wait for the microphone to be passed to you. We ask that you please limit your questions to 2 to start so we can give everyone a chance to ask a question. If we have additional time at the end, we'll be sure to circle back to those who still have questions. So let's kick off our Q&A.
Hi, I'm Ritu from CNBC TV 18. First, I wanted to get in a sense of what the second half looks like. You've given us this constant currency revenue guidance of -2 to 1%, which is perhaps, 2 to 1%, which is slightly better than what the street was expecting. But when do you see a more meaningful recovery, especially in BFSI and consumer, which are 2 of your largest segments, still seeing a significant amount of weakness? 1, that. 2, for the last 3 consecutive quarters, we've been seeing a decline in the headcount. Net decline of almost 8,800 in this quarter. Is that unusual, even though the attrition rate, I understand, has been coming down? And what are your hiring plans for the year? And if I may add, this large investment that you've announced of $1 billion in AI, when do you start to see that yielding results in terms of better revenues? Thank you.
All right, so thank you for the question. I'll try to remember the 3 questions or the 4 questions I'll take, and when I'll give maybe 1 to Saurabh and 2 Jatin. So the first one is, your question is around, outlook for the second half. And to be honest, I think it's too early to tell. I think, by definition, we are, as I have said for the last 2 quarters, we are in a time of uncertainty. And therefore, companies are not necessarily very forward-looking in terms of, how much they're going to spend in 1, 2, 3, 4, 5 months from now. What we are observing is that there's a ton of programs going on, and that's why we are, doing another solid quarter in terms of bookings. But there's also a lot of smaller discretionary spend that have been maybe postponed or stopped. And I think, when will this resume in the sectors in particular that you mentioned? Too early to tell. I like to be talking about what I'm seeing, and I would say for the time being, I continue to see more or less the same market that, the one we saw a quarter ago. So that's on the first question. On the second question, which is around headcount evolution. You probably remember, actually, I mentioned we have we have done some organizational changes in creating 4 GBL. And that has, met 2 key objectives. One, that is to get us closer to our clients and be able to drive more comprehensive end-to-end transformational solutions for them, and at the same time be more agile and more nimble. And I think, as a result of that, we've been able to streamline our operations, reduce the number of overheads, just remove some of the layers of unproductivity that we had. So you should look at this. For sure, I would say the kind of muted growth that we are seeing is not driving necessarily the need for more headcount, but I think some of those adjustments are more coming from the fact that we are more agile and more efficient as an organization. Jatin, question about AI budget. Oh, sorry, I can take that one too. On the AI, investments are starting now. I mean, we are literally on it. We've invested for the last years, but we are now accelerating. And so investments are starting now. A significant part, the biggest part of those investments are organic. So it's, investment that we are driving already now. I believe this month, as you know, we have shared this, we are going to
Hello and welcome to Business Today Television. I am Karishma and joining me today is Secretary Revenue, Mr. Sanjay Malhotra. Sir, thank you for joining us on India Today Group.
My pleasure.
I'd like to start off by, of course, asking you about the big decision that the 50th GST Council made, and this is on the 28% on GST on online.
Minister and Governor of RBI. For more on this scheduled meetings, I invite Secretary Sir to kindly brief the media.